Hey everyone, and welcome back to Road Trip to Fire, your source for going on your road trip to financial independence.
Hey guys, today I want to talk to you about Agronomics, a stock that I recently invested in. I want to have a little bit of a deep dive into this company as to why I invested into it. I already touched about cultured meat and agronomics in my previous videos, so I'm not going to go into details about this technology again. I want to focus on agronomics right now, and we can see on their website also, if you go to their website, you can see a little bit of information about what they invest in. So they invest in cultured meat, so they do it for the environment because it's needed for humans, for human health, for climate change, for animal welfare, and so on. So we all know all this, so let's focus on the investment case here. So before we begin, let's go over their portfolio highlights. Agronomics is like an investment company, right? So they are investing into these seed companies, into these startups, or companies that are a bit further beyond Series A, Series B, maybe even Series C. We'll see that later on. And here's their portfolio. Their portfolio contains a total of 16 companies that are in this cultured meat section. So you have, for example, Blue Nalu, who's working with cultured fish. Actually, I heard about this the first time on the website of Agronomics. I didn't know that existed. But you have also a ton of other companies. Meatable, the more famous, at least in Europe. Mosa Meat from the Netherlands. Solar Food, they're creating proteins out of thin air. New Age Meat is creating cultured sausage. So you really have like a very big variety, 16 different companies. About half of them is working with cultured meat. About 25% is working with plant-based meat or something else. And then 25% is working with like what you would call the pikes and shovels. Because when you're digging for gold, you have to be in the pikes and shovel business as well, right? But as you can see, Agronomics is pretty well invested into this whole area. It's actually probably the best investment vehicle you can invest in if you want to be in this groundbreaking revolution. Agronomics also talks about that. It talks about future market potential. So Agronomics is really thinking that cultured meat will take over the meat industry in about 10 years. They are in that area, they are in that space, and actually if you see the meat industry, we're talking about $1 trillion industry, but you also have the plant-based industry, and I think that cultured meat will also take a piece of that market. Because when I talk to vegans, not all vegans are convinced. Most vegans do agree that it is vegan. Vegans that I talk to do agree that it is vegan. Some state that they don't really need meat, be it fake or be it natural. But generally, most of them are willing to give it a try and see what it's like. So that's a good thing. So a bit deeper about the stock. So the stock is currently valued at 23.5 GBX, so that means penny. So that means about 1/4 of a pound. So it's located in the UK. That means that you might get some tax advantages from the UK and you invest in this. And what we're seeing, it's not that old yet. So it started in April 2019. It traded pretty much flat for the first 2 years, although it never really went below its introduction price. And then it really started to pick up here as cultured meat gained traction. So one of the tractions was, of course, Eat Just, that got approval to sell cultured meat in Singapore. Singapore, understandably, they import almost all their food, so cultured meat is extremely important to them. And then here we're seeing that it has a huge uptake, all up to the way of 37 pence. And then we had a drop. So the drop is related to the share dilution that happened in this period. So I will come back to that later. And right now it seems to have found its ground. When you look at the 1 month chart, you see that it's found its ground kind of at 23, 24. So it's been trading on that. So that's actually a good thing because that's what we want to see as an investor. We don't want to invest when it's still dropping, or we don't want to invest after it took up this huge boost, because if the stock doubles in no time, then might see some correction like we saw there. So when we're going a bit deeper into the financial data, What's important here, I don't think it's relevant to look at the financial data like the balance sheet, because these are, it's a holding company of startups, so they're not going to have any profit in this zone, but the market cap is important. 187 million, so keep that in mind. And then the number of stocks is also important. 575 million, and outstanding, so that's including the warrants, is 800 million. So this is interesting. So what happened in May? Originally it was about 500 million shares, and then there was a dilution of about 50%, adding another 250 million shares in the form of warrants. What are warrants? Warrants give users the opportunity to buy at a certain share price. So the share price at that time must have been around 37 pence, and the warrant was for 28 pence. So that means existing shareholders got diluted with 50%. But the total amount of money that they got with that fundraising was 63 million. That's important for later on when we go to that portfolio and why it adds enough value to the existing shareholders. So what's important also to note is the dilution expected going forward. So here, this in the circular note, you can just find it on their website. Here they say the company has allowed an issue of over 1 million new shares, and now we're talking about 225%. With a growing company, it's not unexpected, and if that money can be used to increase the underlying value, then that's not a bad thing for investors. We might actually want to see it. We want to our company that we invest in to invest into these extra companies and give them a chance to grow. I'll come back to that later as well. And I have the impression, if I understand here correctly, that the authority will expire on the date of the company's next annual meeting in 2022. So that means they might already dilute the coming year again. They might. We don't know about it. I think a lot has to do with how much the share price will fluctuate. I wouldn't expect that they would put these prices at the market at a lower price. So let's have a look at their current portfolio, also quite important. So this came from Reddit, from a user called Vegan Runner 95. He made a great overview of the current portfolio of Agronomics. It might already have changed a bit, it's about 1 month old, but I think it's quite realistic. So here you see that there is a pretty good division. We don't see any company taking a too large portion. We see that there are 16 companies. What's also interesting is the invested capital, so 28 million so far, and the unrealized value, 55 million. Now the unrealized value doesn't really necessarily reflect the real valuation. And why is that? Well, to start with, most of these companies have no sales, so it's quite difficult to value them. So you're valuing them based on the investment interest that people have to invest in these companies. Secondly, why it might actually be too low is because you can only evaluate when there is that new investment round, right? And only 4 companies here have seen that new investment round. So that means that the other 12 companies are probably higher valued than what we're seeing here. So that's good news for investors. So we also see a market cap of 1.6 billion for these 16 companies. So for example, Beyond Meat, which is not really the same as this sector. I really think this sector is valued more than the plant-based sector because of the potential to take over the meat sector. But let's take Beyond Meat, which is the closest we can to comparison. They had an IPO at 1.5 billion. They're now valued 6 billion. So that shows kind of the potential. And here all these companies are worth together what Beyond Meat was at the IPO. So that means the upside here could be huge. Now, we only have, if we invest in Agronomics, we only have a stake of 55 million. But if we recall, we also know that Agronomics managed to pick up 63 million of additional cash, which they can use to invest into these companies or perhaps a new company. That's particularly important if you look at the stages of these companies. So we see what are different stages. So you have pre-seed. We don't have much pre-seed here, but that was already last year. So few pre-seeds, few seeds. Pre-seed is like, oh, I have an idea. Seed is more, I have a plan. But if you're going to Series E, Series A, then you have to have a business plan. Series B, you have to have an actual product. So you have to have something tangible, right? So the most difficult for companies actually is to get to that Series B. All the others, they are like test drives, but the Series B is the one that matters. It's not easy to get to. There is a large amount of companies that go bankrupt. And we feel quite reassured when we see the amount of companies that are in Series B. Maybe the amount is not so large, but in terms of valuation, it's about half of the valuation of this portfolio. So that's great news for us. Blah, blah. We also see that none of these companies have made it to Series C yet. Series C is the final step that could lead to potential IPO. We are not sure about that, but Series C is when I would expect that the company would go to if they're ready for high-scale production. So we can definitely expect that with some of these companies for the next years. When will they actually do that? One, their product is good enough, so it tastes like real meat. And secondly, they get approval, like just meat cut in Singapore, so we know there's definitely potential to get that. They get approval in the US and the EU. They look at their total evaluation, so you have this 55 million plus the 63 million cash flows, plus the unrealized value of the 12 million companies that they don't have. So assuming that Agronomics will be investing that 63 million smart, then yes, probably it is a good investment. The underlying value of the company kind of matches the stock, but it's still hard to say. And let's be honest, there is a few companies that could go bankrupt here. This still is a very uncertain industry. I want to remind you that I'm not a financial advisor, and you should always do your own financial advice. But based on this analysis, I thought it was okay to put in some money in there, maybe every 3 months, like DCA a bit, for the fact that I think that this industry could have a huge impact the next 10 years. It will be one of the world-changing technologies, but also from a humanitarian, from an environmental, from an animal welfare perspective, I put in my money there. So check out this interview. It's with Jim Mellon. He's director at Agronomics, and he talks about the plans for the short term for this year for Agronomics, but he also talks about how investors will make money in the next 10 years by investing in Agronomics. Listen to this.
It's about $100 million in size at the moment, and our objective is to make it $500 million by the end of this year, which I think we can do through a process of NAV accretion and also the money that is sitting on the sidelines that wants to come into this area is enormous. But as you rightly point out, there's a vegan ETF in the US that, as far as I can see, just invests in Facebook and Google, which I don't know what they have to do with veganism. And then there's a couple of Mickey Mouse companies, but there's nothing listed yet. So it's a very good way for investors to participate in these companies, because most of them are just going to stay. I think a lot of them will stay private. I mean, I think the whole industry will evolve as follows. I put it in my book that companies are going to fold, as they always do in new areas. Most of them will be sold. I think that the big food companies will buy them for their technology. So rather like biotech companies are bought by big pharma companies so that they act as the marketing agents for their innovative products, and it'll be the same with this. And there'll be one or two that will plow their own furrow. So if I had to guess, I would say that in 10 years' time, Agronomics won't exist. It will have paid back, its profits to shareholders and distributed any of the companies that go forward as large companies to the shareholders by way of a specie distribution. And then obviously there'll be a few that will have gone bust in the portfolio, because that's the way of the world. But overall, I think this industry could be very large indeed. And at the moment, it's just, as I said, $400 million has gone in. I expect it to be well over $1 billion of fresh capital this year, probably a lot more. So the money is, as with everything else, is beginning to follow the trend of consumers wanting to eat cleanly and healthily. And let's face it, all pandemics, all of them, have come from food malpractice, largely in the Far East.
So what are the two main points to take away from this interview? So firstly, you have the upside on the short term for investors. He plans to increase the fund from 100 million to 500 million. How is he going to do that? Probably share dilution might play a part in this, but also you can't do that with share dilution alone. So he must be expecting a major upside for this fund. So, and then the second question is, and then the second thing to remember is how investors are going to make money. So looking at a 10-year period, he thinks Agronomics will cease to exist, and by that time, shareholders will either have been paid in shares, in IPO shares, or in profit taking. My preference would be, of course, the shares. I would like some shares in that Mosa meat company, but that will be up to the decision of Agronomics. If you did enjoy this video, please like, please subscribe. This will help my tiny channel so much, guys. Thank you so much for watching, and see you next time.